We also had Bank of America, BAML, as we like to call it, BAML economist Michelle Meyer, saying now that our calculations suggest a major trade war could lead to a significant reduction in growth. So for the first time, we're seeing economists even come out and warn that this could actually lead to recession.
Yeah, I mean, like I said, it's uncertainty. Nobody, not even the White House knows what the end game is, how this really plays out. And the thing that we got actually from the oil market this week was certainty. And you saw what that did for the oil price, kind of put a floor under oil prices. I think the one bit of stability we saw this week was with the OPEC decision. Outside of the OPEC, you basically have, whether it's China or it's the U.S. or Europe, you have a lot of uncertainty. Now, I know there's a view probably held by the White House, which is, oh, we can tough it out better than them. The Chinese stock market did terribly this past week.
Which is true, by the way.
Yeah, but here's the difference. The leaders in China don't look at the Chinese stock market as a proxy for their policy.
No,
whereas the United States, it is a proxy for our economy.
That's fair, but in China, if the main thing is to keep people employed, so they're not out protesting against the government, and the only way they have to do that is to make sure that that certain sectors are humming the way they've been humming the last couple of years, and they're not humming anymore. Yeah. They got to do something, and I don't know what that is. I don't know how you keep.
All I'm saying is, you're dealing with, it's a bit of apples and oranges. The U.S. stock market, if the U.S. economy goes into the tank, the U.S. stock market, or before it does, the U.S. stock market will react.
Yeah.
China is operating in a different economic context with a different economic
but my point to you is, do you think this will actually hurt the U.S. economy in the way that it actually looks like a much bigger threat to the Chinese?
I think it hurts the economy because it starts to hurt confidence, and you can't put a number on that. It's a very hard thing to actually figure out.
See, I agree with that, because the risk right now, no, it's not going to hurt the market, but the uncertainty that's being created, at some point, if CNBC, you did a quarterly survey of the CFOs, right. 65% said the current trade policies will hurt their companies. 20% said will really have a negative impact. Now that right now we've got enough earnings growth to offset that, but it's not just take so long before CEOs, we've seen this before, they step back, they don't know what the policy is going to be, and they stop spending, they stop committing, they stop hiring. Now we're not there. We're not remotely there.
But it's fair.
But if it drags on.
Look, this was supposed to be the time everyone's investing because they have the tax cuts and the break from that and stronger economy. So, it's unfortunate.
And one of the big problems is, even at the White House, we know there is not unanimity in a point of view. And whenever you go into a negotiation, you like to have all your forces kind of aligned. And that's just not the way Trump operates. I don't think he will. There you go.
But it's by his own book, and it's oddly effective a lot of the time.
It's oddly effective until it becomes ineffective. And I mean, that's one of those things. It's like, it works until it doesn't.
No. Or it doesn't work until it does.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.